Alessandro Valentini. It's been a rough 3 months for healthcare stocks after such a great start to the year, but now we're hearing politicians talk about drug pricing, we're hearing about inversions. So is it going to turn back up? Is the worst over?
Well, the way we think about healthcare and all our investments at Causeway, it's really on a bottom-up basis. So we think about the value and the investment rationale for each individual company in the portfolio. When we look at the larger environment for healthcare, yes, pricing is in focus again, but we are in a political cycle, in an election cycle, so that's something that we would expect. What we see the opportunity to be for the next few years is actually the return of capital and the allocation of capital that these companies have made and how they are changing that allocation of capital. We've seen internal rate of returns for R&D expenditure go up in the last 5 years, and we think they're going to continue going up. We've seen companies take a more thoughtful approach to M&A. We've seen Glaxo and Novartis, for example, swap assets, now make acquisition, which has generated value for both companies. And we're seeing companies, when they don't see the right opportunity, return cash to shareholders.
All right, well, one stock you like over Causeway is Johnson & Johnson. In their third quarter, they got hurt by the stronger dollar. Also, their hepatitis C drug, they got hurt by that. Can they turn it around?
Sure. J&J, it's a great franchise. J&J is a company that is involved not just in pharmaceutical, they're involved in medical devices, they have a great franchise in consumer products. The strong dollar is a hurdle for them. We don't forecast dollar. We are relatively neutral in terms of how we think about the impact of the currency. We just see a ton of value in J&J in terms of the ability to deliver on the pipeline and the market now giving them credit for the pipeline, but also to improve margins because of the mix of business. So we think that the stock looks very attractive at the current levels.
All right, speaking of pipelines, you also like Eli Lilly. That stock's up over 17 or 18% so far this year, but they're cutting a lot of costs there. So that's how they're making some of their numbers. Is it going to cut too deep, maybe hurt that pipeline?
When you think about Eli Lilly, and you think about Eli Lilly a couple of years ago when we started looking at the company, it was a company where the market just completely disregarded the value of the pipeline there. Management has turned around the story and they're really being able to deliver on the pipeline. And what you're seeing, they're following the dual approach where they're both delivering on the pipeline, but they're also bringing their margins to the levels of the rest of the pharma industry. So no, they're not cutting too much. Their pipeline and the R&D effort are very attractive. And in addition to that, they can improve margins by taking those that focus on the fixed cost, and they are definitely delivering on that.
All right, and then finally, you are a fan of Novartis. This stock's down around 13% in the past 3 months. They missed estimates in the third quarter, I'm pretty sure. It got hit by some lawsuits. Is the worst of it over for Novartis?
Novartis is very interesting on a 2-year horizon. So when we think about Novartis and the value there, it's somewhat similar to J&J, a very diversified franchise. They have a franchise which is a strong pharma franchise. They just launched a cardiovascular drug, Entresto, which has a very attractive profile, and the launch will be slow, but we think that has enormous amount of value for the company. But it also owns Sandoz, which is a generic player, very involved with biosimilar. And we think that Sandoz is in the right place to take advantage of that trend. So the combination of the two issues and the fact that Novartis has been very thoughtful on allocating capital. They've done a deal with Glaxo where they bought the oncology franchise from Glaxo, and they are a better owner of that franchise. They can extract a lot more value and improve margins dramatically. And they sold their underperforming vaccine business to Glaxo for a very attractive price. So we think management is doing the right thing, and we think that the value is there for Novartis in the next 2 years.
All right, well, thanks a lot, Alessandro.
Thank you so much.
Thank you for watching The Street.